Hey everybody, I hope this finds you well. Wanted to do a quick Sunday analysis. I wanted to go through a few different assets and different commodities just to kind of show the breakdown of my outlook for the week. It's going to be very simple. I want to also do this so you can practice this as an opportunity to do your own weekly analysis. But I kind of want to do a overall market review for a few assets to kind of show you what I'm looking for during this week and kind of some of the things that we can expect. So we'll go ahead and jump right in. And so first we're dealing with a few pairs today, or commodities today, which is going to be the NASDAQ or NQ, S&P 500. We're going to deal with the Dow or US 30, gold, platinum, oil, and the euro dollar for those who still trade Forex. Nothing wrong with that. So let's go ahead and get started. So we're on the daily time frame. We're going to only look at the daily and the 4 hour. We're going to look for the daily for analysis, 4 hour for the possible setup right here before the market opens tonight on Sunday to kind of get a view of what's going on. So first we'll start. And so what I'm going to focus on mainly is really just highlighting the areas of opportunity, the areas that our market may be looking at to respect or to deny, and then we'll see where we go from there. So first, let's go ahead and get started. This is kind of how I do my daily analysis as well for our weekly or daily recap every morning for our NASDAQ review to kind of get an idea. So first, we'll start with current price action. The last 1, 2, 3, 4, 5 days, we've been bullish, and now we're getting up to an area where we may be getting into resistance. This is called the visual volume profile. What it highlights is where the most volume takes, or where action takes place, volume takes place at key levels. So most times if you put on a volume indicator, just a traditional volume indicator, you'll end up with volume. So how many ticks or how many contracts were traded on a certain candle, but it doesn't tell you where that is actually happening at. The volume profile, let's go ahead and get rid of this. The volume profile, in this case, the visual volume profile, shows you where that volume is taking place. And so we want to use that as also support and resistance. So what we're looking at here on NQ is that we've had 1, 2, 3, 4, 5 days again of upward momentum. We have not had a pullback yet. We are now getting into a place where we are turning. Potentially, we have some smaller candles slowing down here. And so we may see some slowing. And so what we want to do is highlight the area that it can turn. So we're looking for what's called an order block. Essentially where it is where sellers first came into the market. Price is coming back there, and we want to see if this is going to actually act as an area where sellers are still have their orders at and they're interested. And so what we're going to do, we're not going to worry about the words today. So we're going to have, so this area here, we can see where price moved down. And every time you have a 2-bar swing, which is an up candle and a down candle, that is a 2-bar swing. So when you have a 2-bar swing, typically that shows that price is moving away with it goes down, stops, and turns the other way in this case. And with that shows where sellers are buyers. So we're selling, stops and turns the other way. Buyers stepped in here. Same thing. We have seller come in, buyers, sellers, buyers, sellers. A lot of indecision and auction here. And eventually we press down. And now we've got 5 days of upward momentum. So we're coming back to an area where price retested. And so we have these swing down here and a swing down here where we had up and then immediately down to the next candle. And then remember, these are daily candles. So it's 1 day up, 1 day down. And so we're getting back to that level, which is roughly about 19,000, let's call it 19,650, 19,660. And we're getting to this level. So what we potentially could see is price react here and move back down. What we also have is every time market moves up without coming back, we have what is called displacement. Displacement means there's a lot of one way and not the other. So what that means essentially is when we have a fair value gap, is that price displaced. It pushed up, but if we never had it come back and retest. So when we have that, the displacement, we don't have an equal amount of buyers and sellers. So we have buyers in this over 5 days, but no sellers coming back to equal out that price. So typically the fair value gaps act as magnets. It'll either pull price back to it at some point and pull through it, or it'll pull back and then you act as resistance or support, depending on what side of the market's on. So what we see now, price has pushed up for 5 days. We're coming to an area of where sellers may be sitting. We've displaced. And so also this may pull back to fill those orders to push higher. And so what we're waiting to see is if we do push up here into this area of, call it 19,650, 19,660, we'll have rejection if we can't break through. Just to highlight, and I don't want to over clutter the chart, but we have a swing high here. And when I'm drawing these swings, just so you know, are these levels, I'm looking at, we'll go with the supply block. what I'm looking at is the two candles, and I'm marking it the lowest body and the highest wick. And so in this case, the body on the first candle is the lowest, the wick on the second candle is the highest. Same story here. I use this one. The body on this candle is lowest and the wick is higher on the second candle. Whatever one has the lowest body and the highest wick is how I mark those levels in the daily time frame. So we have multiple levels here, multiple touches. Now, again, I don't want to over clutter the chart, but we have multiple levels of resistance. You can see that the volume profile is also showing there at 20,000. And so we may slow down and not even make it up to these levels for potential pullback. But again, we'll have to wait and see because market is going to do whatever market wants to do. But right now, we're looking at this week. We could either push up, reject from 1960s, clear this area of 19600 into the 19650s, 660s, and then turn down to fill fair value. We might actually even, if we push past this volume node of 19600, and we could go up to the next one, which is this higher level up here, just shy of 20,000. We rejected 20,000 multiple times and then had this down move. So we may want to actually push past this level and go up there, but we'll watch and see. We'll draw it as they are interacted with. And just as a cool framing, we want to also highlight the fact that we do have support down here where price went down, stopped, and turned up. And so that's kind of what we're seeing on the daily time frame. So with that, we see price has again moved up 5 days, and now it's coming into an area of resistance up here at 19,660. But we do have a volume node here at 19,600. So this area is going to be contested, and we may stop here and turn around. We do have a smaller candle. This last candle on Friday was smaller than the other movements up, so it could show some signs of slowing down. We have this fair value gap where we don't have any sellers who are coming back to fill the buy orders. Buy orders are sitting here. We might come back, fill them. If we press through, we'll come back and fill some of these and then push back up. Or the alternative is if the sellers are overwhelming to the buyers, we may push all the way through this and then get lower. So we'll wait to see how price does. As we drop down to the 4 hour, what we're potentially looking at is a simple setup. We either will have, and I can mark this level darker, we will either have price reacting. We can see 1 touch, 2 touch on this trend line. We will either break out and then deal with this to see if we move higher, or we will reject here and come and fill the fair value gaps. And so that's what we're looking for. If we get a breakout on the 4 hour, we should go long. If we get, again, the trend line, then we can see buyers. You can either wait for the breakout, pullback, continuation, which is something to this degree, like breakout here, pullback, continuation. Something to that degree, not necessarily to those levels. It's just I want you to see the pattern, not necessarily where I drew it at. Or we can just have a straight, what I tend to look for just a straight breakout to the upside like that. And I would typically get in on the 15-minute once it closes outside. I wouldn't wait for the 4 hour close. So that's what we're looking at on NQ. Let's go ahead and jump to the daily time frame again. Go to S&P 500. We have somewhat of a similar setup. We have 1, 2, 3, 4, 5 days of upward momentum. Market just opened for the week. And so what we're looking for again is how it's going to react. So you can see that it multiple times it reacted here at this level of 5,006, let's call it 5,640, 5,630 in that area. So I'm just going to, because we have multiple areas up here, I'm going to find the highest wick, and then I'm going to look at the 2 bars. So we have, there we go, the lowest body between these 2 candles. So just again, I use this wick as the highest wick, and this body as the lowest body between these 2 candles. So then I'm going to mark this red for, sells, so that can make sense. And then we also have down here where price pushed down and swung back up. So we mark our buys here, boom, and then we'll mark that as our blue just for buys. So it's demand down there. And then we also have the same scenario where we have some displacement here, and we'll mark that. And this is called a fair value gap, because when price comes back to it, it's now that the buyers and the sellers have agreed that this is the fair value price. So I don't want to complicate it, but essentially, again, we have a lot of buying orders here, and we don't have any. They have not been filled yet. So what we're looking at, potentially the same scenario. We open, since we may push into this area first and reject, but we do have a volume area profile node here at 5,000, let's call it 630 to be safe. We may start rejecting here or wicking in this area and then try to fill these buy orders to push up higher. If we come lower, we're definitely going to see potential for push up. Those who are, are into Fibonacci's, we have this sequence here where, where price is at right now. We could potentially, if we do turn, we'll turn back somewhere into those volume area, those displacement levels. But that's what we're waiting for. If we go down to the 4 hour, you see kind of setup we have again the same trend line set up. We got clean touches here, and so if we break out, we're going higher. If we don't break out, again, we're going lower, and it's just a simple setup. We have 2 touches here, 2 touches here. So we'll wait for those 4 hour areas to break out. Again, you can do this on a lower time frame if you're looking to trade this now. Let's go and look at the daily time frame here on the YM, which is US 30 or Dow. Same scenario. A lot of the US equities kind of have the not exact figures, but we have less resistance here. So let's look at this so that you can understand it. So we have rejected this area once, twice. So this wick has rejected it, so we can draw it just to capture it. Boom. And so we have that. Let's mark it red so that we understand that that's where sellers are. We've rejected it, and now we've rejected for a 3rd time. We may or may not break it. We'll have to wait and see. And then we also have this move from the downside to the upside. We wicked it and then pushed higher, so that's demand, so that has shown that it is working. And then we also have a fair value gap displacement here, marked by this fair value gap on YM. If we mark this here, you can see fair value gap that we have the potential of pulling back here to move higher. So what we're looking for, since we have rejected this on Friday, we pushed up, rejected it, and that was roughly just about 41,560, 41,570. So we'll call it for the even number of 41,500 is the area. We'll push up there again and fail, move back and fill this. If we push past this, that means that we want to see this lower. If we kind of stall here, that means buyers fulfilled the orders, prices decided, and we may push back up into this area. So those are potential outcomes. We drop down to the 4 hour, we can kind of see just a slight trend line here from this level to this level. If you go from this level to this level, you have an upward moving line, which is more flat than anything. You could get a trend there, but it just would wait it out. And then we have an upward moving trend as well. So we'll see how we kind of play through these levels, if we break them or if we squeeze and consolidate over the next couple of days and hours. And then from there, move to the outside. And so that's what we have on the equities. So NASDAQ, same story. We're testing the highs and this downward moving trend line. On the S&P 500 or ES, same thing, downward moving trend line, testing the highs to see if we break out into highs back from July. And then same thing with YM, which is US 30. We are now on our 3rd attempt to see if we can push outside of this or reject, and that's all on the daily and 4 hour time frame. Let's go ahead and jump into metals here. So gold has been, if we zoom all the way out, just so you can get an idea, gold has been rallying, pushing higher and higher and higher. And so because of that, we should expect more moves to the upside. Again, what we'll end up seeing is market will do whatever the market wants to do, and that's fine with us. We are okay with that. So what we should wait for is kind of get an idea of what market wants to do. So let's go ahead and zoom in just a bit here and get an idea. So remember, 2-bar swing is a support, 2-bar swing to the downside is resistance, and then displacement is fair value. So we'll start with the fair value gap here. And so we have a fair value gap there where we displaced to the upside, meaning there are more buy orders here potentially, and then we might fill these orders and push higher, or we can continue to push higher. This could be a gap away where the displacement then leads to more displacement. So we'll have to wait and see. Just underneath that, we have this down move and then this up move. And so we'll just capture the first one here, which is this level of support down in the area of roughly about 22,500 or 2,540 to 530. Let's call it that, 2,540 to 530. We have a volume area profile node in this area where we had a lot of price action happen. So if we do come down there, this is where we're going to support, just at the area of supply. This should be demand. This is not where sellers are. This is where the buyers are. So we come down to the area of demand where we buy here and move up. If we fill these fair value gap, we come down and fill it, then we may use this as support before this support down here to move higher. If we don't, we'll break through and then contest this level and see if this will hold and if we move lower. We don't have anything from the upside. If we zoom out even to the weekly time frame, we are at all-time highs, folks. So we don't have anything trending downwards, and so we don't have a trend line to the upside. So you'll have to wait for some level of pullback to find that opportunity to get long on gold. It's not a good idea to try to, catch a falling knife at the moment. If we break levels, fill these gaps and push past it, break these lows and break these lows, then we can potentially see, I can draw another demand zone here so you can see it on the daily time frame. We have another area of demand where we have multiple days of testing. If we break these levels to the downside, then gold is going to kind of try to reclaim some of this price action down here where some of the displacements have happened, which I think most have been filled. So we don't have any displaced price. Most have been filled for what I can see. But we'll come and try to fill some of these orders to the downside if that's the case. But right now, we're moving up, and so gold has an upward movement. So we'll wait for price. We go down to the 4-hour time frame. Again, we don't have anything but a trend line to the upside that may add so we have a trend line here on the 4-hour, and then we have a trend line from this level to this level. And so we could see potentially gold, if we come down and we are done going higher, break down into support in this fair value gap, or into support here, demand zone or demand order block, and push up. If we break these, we clear these, we're coming all the way down to this next level, which we have demand way down there showing on the 4 hours. So right now gold is very bullish, and we will wait to see if it has a slight pullback before continuing, or it would just continue. That'll be interesting to watch and see. Let's deal with platinum. Platinum has had a rally up, breaking these highs and breaking these highs. And so let me kind of quickly show you. We've cleared this area, which was a seller's level that we returned from, rejected and turned. We've now decided that level is not the level that price wants to be stable at. So we've moved higher. So what we're looking for again is at current price, what is the next level up? Well, we have this up move and this down move with the wicks. And so this up candle, this down candle. And so we've drawn our area of supply where price can potentially turn. And then our area of support is just below that, where we have this up and down candle here. And we'll make sure we mark that the right color so that we can see the demand is there. And then again, we clearly have displacement. Price has shot up for the last couple of days, and then shooting up for the last couple of days. We've moved away. So again, same story. We are positive. We could be pulling back to fair value to then move higher. And we do have some nodes in the fair value gap that may support that case. We are resisting at some higher nodes around the $1,000 level. The $1,000 is a psychological level that we're at now. We broke it on Friday, and then we pulled back a bit, and so we may be resisting here. So we'll watch and see if we go down to the 4-hour time frame as far as a potential swing setup for something you hold long term. We've kind of broken that level already, and so the opportunities kind of look like it's already. So we'll wait for a pullback back to it and then push out. If we break out of resistance, go back to the daily time frame, we can see a potential pullback and then move higher. And in that case, will then be the play. So right now, we've already moved down, we've broken trend, we're moving up, and then we potentially may pull back, which may be the play to catch the longs on platinum. Let's deal with crude. Crude has broken down over the last couple of weeks. We're on the daily time frame. And so what we're looking at right now is potentially lower movement. We have demand at this level on crude oil, roughly around the $66 space. Let's call it $65.75, give or take. And then we've also drawn this up and down, fresh up and down Thursday, Friday of last week. And so we have this tight level range here. Let's call that supply where the sellers are. The next level of supply is much, much higher in the $75, almost $80 space, $75, $76 space. And so that level of resistance will be a huge move pullback, but we do have, again, some displacement. So what do we have here? We have a fair value gap as well, a bullish fair value gap where we've seen price move up, one candle displaced on the second candle, and potentially could come back to that. So my expectation is if this, we can have two outcomes, and I'll draw it here. Either we break low, use that fair value gap to be the driving force. As far as volume, fulfill the seller's volumes, put a push down, pull back, test it one more time and push to the downside. Or at this current point, we can also see somewhat of a shorter move to the downside, a break out, and then a test and move higher. Last scenario could be just something where we have this level of consolidation between everything, and in that consolidation then we'll wait for some form of breakout to whatever side it decides. But right now we do have displacement higher where it could potentially try to draw to. So in this case, right now where price is at, we have moved down by breaking these lows, and we are potentially pulling back. We would go higher to pull back before moving lower, so we'll have to wait and see. But we are in an area of resistance that is fresh, so we'll have to pull away and then pull back to it to test it. So we'll wait and see on that. And last but not least, so yeah, just to let me go down to the 4 hour, I'm sorry, so we can take a look. But we have, since price is already trending down, and I can kind of give you a few trend lines here so that you can kind of see what price may want to do. So we have a longer moving trend, somewhat of a moderate trend, and a steeper trend. If we break up, we're moving higher and we're going to fill this gap, then we can use that to pull back some to move higher. If we don't break out of this steeper trend, we're going to move lower and break the lows. There's also a scenario with this moderate trend line that if we break the steeper trend line, that we can break out of resistance, push higher and fill these orders that are calling for it, reject here, and then move lower. It could be a pullback, something where you look at the Fibonacci levels, we can see something where it's a 61.8 right inside of that. So with that, we can watch for price to pull back into that if we break those trend levels. So something to watch on oil. Last but not least is the euro dollar. Euro dollar is, somewhat of a favorite for forex traders. Definitely something that I run on our algos. It's mainly the only thing that we use. We have others, but we mainly use the algo. So let's look at this very quickly. I don't want to keep you much longer. So we have boom, boom, boom. We have an area of resistance much higher between us and supply. And then we have this area of supply as well. Let me mark that correctly here. We have this up candle and down candle. And we have a wick. We're in a very, very large range here on the daily time frame. And then we have this supply here on the downside. And if we draw a demand block, what we have is now we don't have any fair value gaps, because when price moved down, it displaced here, and then candle came and filled it, and both above 50%. And then it's open much higher on Friday, and then here we are on Sunday. So we don't have any fair value gaps here that price wants to draw back to. We do have somewhat of one here, but we've already kind of filled 50% of it, which is a fair value gap just right at the same level of resistance. Let me draw fair value. So there you go. So we have that just at the top of the resistance. So we may move there, fill some of the orders, and then move lower. However, where we are right now, since we pushed up with such momentum back up to this swing, there is a potential if we drop down to the 4 hour for us to swing out of this. And so this is Friday's end, Friday's close. So we may actually break if we push higher, fill gaps. These fair value gap may be overwhelmed, and we may see price push to the highs. We'll have to watch the dollar index for this one, because they're heavily correlated, because euro is paired with the dollar, and so that's the comparison. So we'll watch dollar index on this. But as it stands right now, if we reject off this trend line, we'll be rejecting off of this area of resistance where the sellers are, and we can see sellers push this down into buying. And so we'll wait and see how that plays out. But that is what I'm looking at for the week. So let's go ahead and just look at this one more time. Potentially, if we break out of the trend line on NASDAQ or NQ, we could potentially see some upward resistance, kind of struggle with this area, 20,000, anywhere between where it's at now at 16.6 and all the way up to 20,000. If we break these levels, then we will see this skyrocket. However, right now we're at a decision level. We could reject here. We have a lot of different catalysts for both ways. Same thing with the S&P 500. However, the S&P 500 is at an all-time high. There's nothing higher than this. And so if we break this trend line, which again would play very heavily in S&P's favor right now because of recession talks kind of weakening, Fed talking about cutting its rates potentially this month. We're kind of pricing that in already. And so if we break this trend line, we'll be breaking through a resistance. I don't think we'll have any problems with breaking out, which may drive the NASDAQ to break higher, at least into testing the $20,000 level, 19.9 to $20,000 level. YM is in the same situation, which is the US 30. We have 1, 2, this is the third touch. We break these levels, we are going much higher to this next psychological level of probably 42,000 from there. And then if we hit 42,000, then we'll see if we go to 42,500 or 42,250. If we don't and we reject here, we'll at least come back to fill these orders at 41,000, where we have this volume area profile node that may support it. Gold, on the other hand, has already broken its highs. My expectation is that we're going to go higher. I'm not looking for sells, but if we do pull back, we'll at least pull back to this fair value gap to fill orders, and then continue to push higher. If we break the trend line, then we do have support before we just tank. So I don't expect gold to just drop off like a rock, but I do expect that we may have some pullback into the 28,580 level, give or take, to fill this gap or to come and test this gap even with the upward moving trend line and then push higher. And so I kind of bullish on gold this week. Same story with platinum. Platinum clearly has already broken the trend line, and so we're seeing if we're kind of doing a small retest to push higher. I'm not looking for any sells on platinum. I'm very bullish. We're contesting right now this $1,000 psychological level, but we may clear it and get up into the 20 to 25 level this week. Crude is already moving lower. And so again, what we're looking for in this case is crude has already broken lows, has pushed down, and has pulled back, caused some slight displacement. I think honestly that this will not hold up, and we may see crude oil push up a little higher and then move down, or potentially just drop from here and move out. But I'm definitely bearish on this, but we'll have to wait and see how it wants to respond. But we're in resistance now, and so this resistance, if this holds up, we're coming down back to demand. And I think that this fair value gap will add as the gasoline to push it down there. So I'm still bearish on this. We'll see how it plays out. If we do push again past all of this, 61.8 on the Fibonacci from this down move is upward in this next fair value gap, where we can then see price slowing if these levels don't hold. Then last but not least, euro dollar is pushing towards, if I pushed up on Friday, caused a new swing low. We'll see if we use this as the energy to kind of test and wick in this level and then push lower. But we have been on a upward movement, you can see clearly. So this is a retest, and then we can potentially break out and continue higher. But we will watch all of these throughout the week and wait for those 4-hour break of trends that gives us the clear indication on everything that we're looking at. So if you have any questions, hopefully this helped. It's a bit long, but I wanted to kind of give the weekly overview of everything that I'm looking at. But if you have any questions, if you want some more help on how to trade these on the swing side, let me know. Reach out to us on Instagram. My handle is Dustin Trades, or you can reach us at Kingdom Rich Tech, at Kingdom Rich Tech, and we'll be able to help you from there. If you have any questions, definitely reach out. Have a great rest of your week and safe trading.